All right, welcome back. My next guest is a very familiar face with a big following. He sent us some great notes last night that we'd like him to expand upon. Firstly, he mentions Palantir, right? It's been a tech darling so far this year. And our guest says, in his words, they obliterated earnings as expected, and they upped guidance also as expected. But they're being punished. They're down as much as 7% today. Go figure, right? Another interesting part of his notes, he mentions Warren Buffett. And when Warren talks, people listen. Remember E.F. Hutton? Our next guest makes the comment that Buffett's latest move to cash might just be the ultimate anti-indicator of all time. I want to know what the heck he means by that. So let's bring him on to explain why Palantir is getting punished and why we might not want to follow Warren Buffett's footsteps. Please welcome into the show Mr. Keith Fitz-Gerald. Keith, thanks for coming on. Great notes again this morning or last night, whenever they came in. I appreciate it. All right. What's going on with Palantir? They did well, but boy, the algos don't like it, do they?
No, the algos don't like it at all. And that is interesting because this is where individual investors actually have the upside. What's happening is that the short-term go-fast gang, this is very technical, so hang in with me, the short-term go-fast gang push prices higher, trapping in all the resting orders and the breakout buyers. Then when they were locked in, they reversed hard, going down low to run all the protective trailing stops, to deal with all the collars, everything else that retail investors think they're being smart with. It's a nasty, dirty part of Wall Street, but what they're doing is transferring wealth from the impatient to the patient. Palantir is going to run, I still think it's 3 to 5x from now, has nothing to do whatsoever with the business case, which is getting stronger, and that's what individual investors want to focus on.
I mean, is there any worries about valuation? I mean, I know it's been stretched here. At least people think it's been stretched. Could that be part of it too? I mean, 7% is not anything to kind of sneeze at.
Well, right. So valuations are based on antiquated accounting methods that you and I have talked about many times. So am I concerned about valuations? Absolutely not. Number one, because valuations have no predictive value whatsoever. But number two, in a software-driven era that's running at Silicon Valley speed, measuring it using statistics that were developed for plow blades, horse farms, and agriculture don't make sense. So I would submit the network AI value is where you want to be hunting. PE ratios creeping higher is exactly what you want to see.
Yeah, I mean, I agree with you. I happen to agree with you. I was just trying to play a little bit of devil's advocate there because we've had people come on, a lot of them saying that these valuations are stretched and there's an AI bubble, which might be a bubble in AI bubble talk. That's what really we might be seeing here. But speaking of bubble, let's bring in Warren Buffett, the anti-indicator, you say? What do you mean by that?
Well, Warren Buffett has had a long lauded history, so this is not disrespectful in any way, shape, or form, but he also has a market ability to step aside when the markets want to continue to run. Again, to speak to antiquated methods versus current methods, he's looking at this and saying he has no value, and that's what people are saying. But the fact that he can't find value tells me he's looking in the wrong places. He hasn't participated in Palantir or NVIDIA or many of the other great names that have been running. So my question is, A, do his metrics still apply? I think the answer is no. And B, what's he actually doing? I think he's stepping aside so that when his day is past, his next management team doesn't have to answer the question, what would Warren do? He's getting a hot pile of cash so they can do whatever they want.
Yeah, I mean, there's been talk of this Buffett premium. I think you probably heard of that. And that may actually be wearing off a little bit. Where do you stand on that?
Well, I think that that's probably accurate. I think that legends don't go into the sunset easily or without reservation. So I think there's going to be a pronounced sea change. I'm actually going to be very negative on Berkshire Hathaway when he steps aside until I see what his new management team has got.
So do we take advantage of a 7% sell-off in Palantir to put some on board? Are you a buyer of some of these stocks that are getting hit here today?
Yes, as a matter of fact, I already did quite a bit of that. So yes, you bet I am. The markets are the only store on earth where people fear a sale, and especially when it comes to a company like Palantir that is just getting tossed about because short-term, greedy, glandy money has said, hey, I want to catch this. The algorithms have puked. So what? The business case is strong. The numbers were fabulous. The earnings report was an absolute masterclass in how you do this stuff. So yeah, you bet. And I hope I'm smart enough to buy more.
Yeah, well, that's one of those times where a lot of times the robots don't get it right, and people with a brain like yourself, they're the ones that are going to be taking advantage of the robots that only know how to do one thing. So having said that, is there anything else that you're looking at while we have a couple of minutes here that the viewing public out there should know about? Because they're always looking for a good deal.
Well, let's go to the opposite end of the spectrum, right? The reason you get to pick companies like Palantir that are the high flyers is because you own the great choices, like, for example, a Walmart, which is still doing great things for millions of Americans who are feeling their wallet stretched, who still are in a tough spot. That's the kind of place where brand loyalty matters, discounted pricing matters, great purchasing chains matter, and of course, AI matters, because brand loyalty combined with all of that is a margin expander. So I like the fact that Walmart is doing what it's doing. It gives me the stability that I want so I can pursue the higher, faster ups and downs of a company like a Palantir.
You know, you make a great point. I love what you just said there because, you know, we have Ray Wong on. I don't know if you know from Constellation
Oh,
Brands.
yeah.
He's a tech guy, right? And
Smart guy.
He's excited like I am. Yeah, very smart guy about where this goes in the future, and I think Walmart's part of that, maybe a few more, because he's looking out how AI is going to start really ramping up and helping some of these other retailers out there that are maybe bog standard kind of pedestrian retailers that you're going to see real great productivity gains in the coming months because they're going to be able to employ and deploy some of this artificial intelligence technology. What do you think?
Well, I agree with Ray. He's super sharp. We've known each other for a very, very long time. I think he's absolutely spot on. I would not share his optimism for smaller retailers. I think it's going to improve their operations. But given the choice between a smaller retailer or a Kohl's or a Target and somebody like a Walmart, I'm going with Walmart every single day because they got the size, the scope, the balance sheet, the scale, and the intellectual prowess to move it. I think the smaller retailers are a risk I don't want.
And then lastly, before you go, I've been asking everybody this question, but I mean, it seems to me we'll have some jobs that do come back, but there's going to be some jobs that don't. And that's largely due to the fact that we're going to see AI start to take, you know, anecdotally, they've started to take jobs already. We heard Amazon say that 14,000 of their layoffs they just shed are directly due to artificial intelligence. Will we have a higher productivity jobless recovery? Could that be the case? Could that really? Could we watch the Fed's head cave in on that?
I think not only are we going to watch the Fed's brain explode, we're going to watch their heads spin around like that old Exorcist movie. The Fed's data is going to be flawed because productivity will rise as AI increases, right? And so if that's true, I don't think you're going to lose your job to AI. You're going to lose your job to somebody who knows how to use AI. So I think there's a nuance there that hasn't yet shown up in the numbers. The Fed can't measure it. So what you got to focus on is those great companies. You got to learn to use AI, whether you like it or not. And if you don't want to use it, then you know what? That's on you, not you and me.
Yeah, you're right. Great stuff as usual, Keith. Love having you on the show. Have a great time in Tokyo. Keith Fitz-Gerald coming to us from Seattle, Washington.